Thanks for watching Lessons in Minutes with Jaylee. Like, share, and don't forget to subscribe.
We're going to continue our lesson on the manufacturing account. In our previous lesson, we have looked at some accounting terms that are associated with the manufacturing industries, and we have looked at classifying costs into manufacturing and the income statement costs. At the end of this lesson, you should be able to identify the financial statements prepared by a manufacturing industry, as well as to prepare a manufacturing account from a list of balances. Now, the first thing that we're going to look at are the financial statements that are prepared by the manufacturing business. What are those financial statements? Now, the first one is the manufacturing account. And the manufacturing account is used to calculate the cost incurred in producing the goods. So remember, the manufacturing account is used to calculate the cost of production. Now, when in doing your manufacturing account, you'll find that some principles coming from preparing trading profit and loss account, basically income statement will be coming out. Another financial statement prepared by the manufacturing industry is the income statement. Now, guys, the income statement for the manufacturing industry is similar to that of the sole trader. There are just a few variations, and I will look at that in our next lesson when we're looking at the income statement. Now, the other financial statement that is prepared by the manufacturing industry is the balance sheet. And tell you what, the balance sheet is similar to that of the sole trader as well. When you're doing your current assets section, where you're listing your stock, you'll find that you'll be listing 3 different closing stock figure instead of just one. Because in a manufacturing business, you have 3 different types of stock. These are cost of raw material, we have cost of finished goods, and cost of work in progress. So the closing stock for those stock will have to be shown in the balance sheet, and that is the only difference. Okay, now we're going to get into looking at an example of the manufacturing account. So I'll be using January 2014, number 5B as our example. And the question reads, Blings and Things Manufacturing provided the following list of balances for the year ended November 30th, 2013. And there is additional note, 1/5 of the rented premises is used as office space. Once you see office space, remember that is administration expenses. And the remaining 4/5 of the rented premises is utilized for actual manufacturing processes. So basically the 4/5 is factory overhead. So in doing the manufacturing account, when we get to that stage, we'll be apportioning the amount for the factory overhead, the amount for rent for the factory overhead. So we'll have to do that calculation. Now, bear in mind that when you're doing a manufacturing account, you need to ensure that you read your question carefully. Focus on the note. Like in this case, you're seeing 1/5 of the rent is for office space, which is admin, and the other remaining 4/5 is for factory overheads. In this case, people, you have to show the actual amount for the various sections. So you have to do your calculation. So you'll find that there is a full cost as it relates to the industry, but what is the amount that is related to the manufacturing section, which is the factory overheads, and what is the amount that is related to the admin expense, etc. So you have to read carefully. Another thing is that you have to look out for any accruals, any prepayments, any depreciation. So you have to look out for your adjustments. In this question, there is no adjustment. But just note, you have to ensure that you read your question carefully. You're required to prepare statements of manufacturing costs for Blings and Things Manufacturing for the year ended November 30th, 2013. You're required to show the following costs clearly: cost of raw materials consumed, prime costs, and cost of production. So let us get straight into preparing the manufacturing account. Please note that your first aim in preparing the manufacturing account is to calculate your cost of raw material consumed. Now, in doing this, it is nothing new to you. Yes, it is not new. It's just that in this case, we're using raw materials. But when I say it is nothing new to you, you're used to calculating cost of sales when preparing the trading account for a sole trader. It is that very same concept that you're using. The only difference is that you're picking up the figures as it relates to your raw material. So our first thing is to enter opening stock of raw materials. And from the question, our opening stock of raw material is 20,000. Our next step is to add purchases. And that is purchases of raw materials. And the purchases of raw materials figure is 50,000. Now, because we have carriage inwards and return outwards, we're going to use this column to do our calculation. So that is 50,000 for the purchases of raw materials. Once you're doing the manufacturing account and you enter your purchases of raw material, look out for transportation costs in on raw materials, and also look out for any returns outwards of raw materials. So in this question, we have return outwards. It didn't say return outwards on raw materials. However, the only thing that we have purchased is raw materials in this question. If it is that the return outwards is related to something else, like for example, return outwards of finished goods purchased, then the question will specifically indicate that. So we're going to add our carriage inwards, just like you would do in calculating your cost of sales. In getting to your net purchases, you would have to add carriage inwards. We're doing that just the same. So that's carriage inwards of raw materials. And the value for carriage inwards is 2,000. We're going to add this figure to the 50,000, and this gives us a total of $52,000. From this now, we are going to less returns outwards. And the return outwards value is 1,200. When we subtract that 1,200 from the figure that we have above right there, that 52,000, we get a value of 50,800. And we transfer that to the next column because we want to add that to our opening stock of raw materials. Now, as you go along, don't forget to put in your lines. So our next aim now, people, is to add that 50,800 to the 20,000, and that gives us a value of 70,800. Now, this 70,800 is called our cost of raw material available. So just as how you would get your cost of goods available for sale. Our next step is to less closing stock of raw material. And the closing stock of raw material is 11,700. So we're subtracting this 11,700 from the 70,800. After calculating, the figure that we have remaining is 59,100. Now this 59,100 is referred to as cost of raw material used, or you could refer to it as cost of raw material consumed, whichever term you want to use. Let us observe this section, people. You would notice that if you compare this to that of the sole trader trading account, you would notice that this is the very same way you would have calculated cost of goods sold. basically your cost of sales. It's just that in this case, we're picking up those figures relating to raw materials. Okay? Now we're going to move on to the other section of the manufacturing account, and that is to add your other direct costs. Because once we get to cost of raw material used or consumed, our aim now is to calculate our prime cost. And remember, your prime cost is the total of all your direct costs. So what we have so far is cost relating to direct costs, which is cost of raw material. So let us go now to add in our direct costs. So what you need to do is to check the question if there's any direct costs. What we have in this question as it relates to direct costs is the direct wages. And remember, if you have seen factory wages, is the very same direct wage. Okay? So we're going to add our direct wage. And this is the only direct cost that is in this question, other direct costs. So therefore, we're going to use the main column to enter that. If there were more than one, then of course you would use this middle column to do your calculation, then transfer the final figure to your main column. The value for our direct wages is $60,000. We're now going to add that $60,000 to the cost of raw material consumed, which is our direct cost relating to raw material. And this gives us a value of $119,100. And guess what, people? This is classified as our prime cost. So far, we have completed part I, which required us to calculate the cost of raw material consumed. And we have completed that second section that required us to calculate prime cost. So our next aim now is to calculate the cost of production. In doing that, people, what we're going to look for now are the factory overheads, those indirect costs. Okay, and guess what? We are adding that. So add factory overheads. And remember, your factory overheads are your indirect costs. And bear in mind that once you're preparing the manufacturing account, in most cases, you're adding. The only things that you subtract are your return outwards and your closing stock figures. Okay, so that would be closing stock of raw material and closing stock of work in progress. Now, our factory overheads coming from the question, we have factory overhead of 14,800, and we also have another factory overhead, which is the rent. And remember, the rent figure must be apportioned between the office and the factory. Remember, for the office, we're looking at the administration expenses. So once it says office, that is admin expense. And once it states manufacturing or for the factory, that is factory overhead costs. So for the rent, we need to calculate 4/5 of this 36,000. Where did we get this 4/5 from? Remember, in this statement, it states that, which is our additional note, 1/5 of the rent is for the office space and 4/5 of the rented premises is utilized by the actual manufacturing processes. So in this case, we're going to calculate 4/5 of this rent. So it is 4 divided by 5 multiplied by the rent cost of 36,000. And when we calculate, we get a value of 28,800. So our rent, which is factory overhead, and of course in bracket you can show your calculation. So this would be 4/5 multiplied by the 36,000, and this gives us a value of $28,800. Now, bear in mind that in this question, we only have one that we need to share between the office and the factory. Questions are different. So therefore, other questions may have more items that you need to apportion, but you need to ensure that you read the question carefully. Now, based on the question, we don't have any more factory overheads, no more indirect costs. So we are going to add these two figures together. And when we add those figures together, we get a total of $43,600. Now, this $43,600 is our total factory overhead, which is our total indirect cost. The total indirect cost should be added to the prime cost to give us the cost of production before we look at generating the cost as it relates to work in progress, before we adjust for work in progress. And this is $162,700. Now, if there wasn't any work in progress in the question, this would be your cost of production. Now, because we have work in progress, we're going to add opening work in progress. And remember, it is also called work in process. And the opening work in progress is $16,000. When we add this opening work in process to the $162,700, we get a total of $178,700. And our next aim is to subtract our closing work in process. Remember earlier, I said that the only figures that you subtract are your closing stock figures, as well as your return outwards, if there is any, when you're doing your manufacturing account. So in this case, we're going to less closing work in process or work in progress, the very same thing. And the value for closing work in progress is $3,000. Now, when we subtract this $3,000 from the $178,700, we are left with a value of $175,700. And guess what? This is our total cost of production. So this is cost of goods completed, carried down, and I state cost of goods completed, carried down, which is very same thing as your cost of production. I have carried down because when you get to preparing your trading account, you'll find that this figure would be added to your opening stock of finished goods. Now, this $175,700 is your finished goods cost. So your manufacturing account is used to generate your cost of finished goods. What is the value incurred by the business to complete the goods to be sold? Okay, so remember that in doing your manufacturing account, the first thing that you are doing is to calculate your cost of raw material consumed. Then you generate your prime cost. Then your final thing is to calculate your cost of completed goods or your cost of production. Remember, in calculating your cost of raw material consumed, you use the very same concept like we did in this section in calculating cost of sales, which is cost of goods sold in a sole trader business. But in this case, you pick up the figures relating to raw materials. After you get your cost of raw material consumed or used, your next step is to add your direct cost. In this case, we only have one direct cost, which was direct wages. After adding your direct costs to your cost of raw material consumed, you get what is called prime cost. When you get prime costs, you add your indirect costs, which are your factory overheads. When those are added, you add your opening stock of work in progress, less your closing stock of work in progress, and that would give you cost of goods completed carried on, which is basically your cost of production.
Like, share, and don't forget to subscribe.